Welcome to Section 5 of the Payroll and Workforce Cycle Training for P&J Group. This section covers the independent contractor process from start to finish, a guide to the 13-step contractor payment process. Contractors are not employees, and that distinction carries serious legal and tax consequences. Getting this process right protects P&J Group from misclassification risk, IRS penalties, and fraud. Let us walk through every phase together. By the end of this section, you will be able to 1. Explain the 4 phases of the contractor process and the 13 steps within them. 2. Identify the key documents required at each phase, including the Statement of Work, Form W-9, and the 1099 NEC. 3. Describe the segregation of duties controls that prevent fictitious contractor fraud. 4. Apply the annual 1099 compliance rules, including the $600 threshold and the January 31 filing deadline. And 5. Recognize when a contractor relationship has drifted toward employment status and what action to take. Phase CA is the engagement setup phase. It happens once per contractor, before the very first payment is made. This phase has 4 steps: defining the engagement and drafting the statement of work, collecting Form W-9 and verifying the tax identification number, setting up the contractor in the vendor master system, and executing a written independent contractor services agreement. Getting these 4 steps right before any money changes hands is what makes the rest of the process defensible. Step C01 is the engagement decision and statement of work. The SAL must define a specific deliverable or project, a clear timeline, a defined fee, either fixed price or hourly, and a hard end date. An open-ended engagement with no defined end date increases reclassification risk. Step C02 requires the contractor to complete Form W-9 before any payment is made. The W-9 captures their legal name, entity type, address, and tax identification number, either a Social Security number or employer identification number. Accounts payable should verify the TIN through the IRS TIN matching program. An unverified or incorrect TIN triggers mandatory backup withholding obligations. Step C adds the contractor to the AP vendor master as a 1099 eligible vendor, flagged so the system automatically accumulates payments for year-end 1099 NEC reporting. A critical control here: the person requesting the new vendor setup must not be the same person who approves the vendor master record. That segregation of duties prevents fictitious contractor fraud. Step C04 is the written independent contractor services agreement. This agreement explicitly states that the contractor is not an employee, is responsible for their own taxes, receives no benefits, controls their own method and means of work, and may engage others. That last point, the ability to subcontract, is a strong legal indicator of contractor status. Phase CB covers the recurring payment cycle that repeats with every contractor invoice. There are 4 steps in this phase: invoice submission, invoice approval and matching to the SAL, payment through accounts payable, and backup withholding if it applies. The most important principle in this phase is that contractors are never placed on a payroll cycle. They submit invoices for completed work or milestones. Payment always runs through accounts payable, never through payroll, and no taxes are withheld from the payment under normal circumstances. Step C05 is contractor invoice submission. The contractor submits an invoice referencing the SAL or purchase order for completed work or milestones. Unlike employees on timesheets, contractors invoice for deliverables as defined in the SAL, typically monthly or upon reaching a milestone. Step C is invoice approval and matching. The requesting department manager confirms the work was actually completed. Accounts payable then matches the invoice amount and description to the SAL and purchase order. This is the same 3-way match discipline used in the accounts payable cycle covered in Cycle 2. Both the manager confirmation and the AP match are required before payment is authorized. Step C07 is contractor payment. Approved invoices are paid through the standard AP process using ACH or check. The full invoiced amount is paid, no income tax, no Social Security, no Medicare withholding. The contractor is solely responsible for their own income tax and self-employment tax. Step C08 applies only when something went wrong in C02. If a valid W-9 was never collected, or the IRS notifies P&J Group of a TIN mismatch, the company must withhold 24% of every payment as backup withholding and remit that amount to the IRS. This step is uncommon when Phase CA is executed correctly, but it is a strict legal requirement when it applies. Phase CC covers year-round 1099 compliance. The key rule is this: any individual or unincorporated business paid $600 or more for services in a calendar year requires a Form 1099 NEC. Payments to corporations are generally exempt, with a limited exception for attorney fees. The AP system accumulates running totals for every 1099 eligible vendor throughout the year. AP should review those running totals quarterly to catch vendors approaching the $600 threshold who do not yet have a valid W-9 on file. Catching that issue early avoids a last-minute scramble at year-end and eliminates backup withholding surprises. Step C10 has a hard deadline, January 31. By that date, P&J Group must furnish a Form 1099 NEC to every contractor paid $600 or more during the prior year, and file copies with the IRS. Electronic filing is required when submitting 10 or more information returns. Before filing, AP must reconcile total 1099 payments per the AP system against total contractor expense in the general ledger. That reconciliation catches contractors paid through a one-off wire transfer or petty cash reimbursement who might otherwise be missed. Finance and the controller sign off on that reconciliation before the IRS submission goes out. Phase CD closes out the engagement. Step C11, Engagement Renewal, requires rerunning the independent contractor classification test. Do not auto-renew. If the relationship has drifted toward employment, set hours, exclusive engagement, company equipment, no defined end date, the correct action is to convert that person to employee status rather than continue the contractor arrangement. Step C12 is contractor offboarding. The final invoice is submitted, approved, and paid through standard AP. No COBRA notice, no final paycheck rules, no separation paperwork required. The contractor was never an employee. The vendor master record is marked inactive if no further engagements are planned. Step C is record keeping. The complete contractor file must be retained for a minimum of 4 years from the date the related tax return was filed, as required by the Internal Revenue Code. The file must contain the W-9, the Independent Contractor Services Agreement, the Statement of Work, all invoices and payment records, and copies of any 1099 NEC filed. This file is the primary defense in an IRS classification audit. An auditor reviewing whether a contractor should have been treated as an employee will want to see every one of these documents. Missing records are treated as evidence against the company's classification position. Section 2.2 addresses segregation of duties. 2 controls are non-negotiable. First, the person who defines a contractor's scope and approves invoices must not be the same person who processes payment without independent review. Second, the person who requests a new vendor setup must not be the same person who approves the vendor master record. The highest risk scenario is a single person who defines scope, approves invoices, and processes payment with no independent check. That enables inflated invoicing and fictitious contractor fraud, the contractor equivalent of the ghost employee risk covered in Part 1 of this training cycle. Section 2.3 assigns clear ownership across departments. The requesting department defines the SOW and approves invoices. Procurement reviews the SOW and coordinates vendor onboarding. Accounts payable owns W-9 collection, vendor master setup, invoice matching, payment processing, and all 1099 tracking and filing. Legal drafts and reviews the IC services agreement, retests classification at renewal, and advises on state-specific ABC test requirements. Finance and the controller oversee backup withholding, the 1099 to GL reconciliation, and year-end 1099 sign-off. Treasury handles disbursement through the standard vendor payment process. Management approves engagements above authorization thresholds and receives the annual classification review report. Here are the key takeaways from Section 5. 1. Every engagement must begin with a statement of work that has a defined scope, fee, and end date. Open-ended arrangements increase reclassification risk. 2. Collect and verify Form W-9 before the first payment. A missing or invalid TIN triggers 24% backup withholding. 3. Payment always flows through accounts payable, never payroll, with no tax withholding under normal circumstances. 4. Any individual or unincorporated business paid $600 or more requires a Form 1099 NEC by January 31. 5. Segregation of duties is the primary fraud control. No single person should define scope, approve invoices, and process payment. 6. Rerun the classification test at every renewal and convert to employment when the relationship has crossed the line. 7. Retain the complete contractor file for at least 4 years.